If you have ever been told by the bank that, sorry, we cannot approve your mortgage, then this video is for you. Hello, my name is Satveer Atwal and I am a mortgage agent here in Ontario. And today I'm going to talk about a fact that frustrates a lot of people, which is mortgage being turned down even though we can comfortably afford our payments. Maybe you're self-employed, maybe your credit had few hiccups back in the past. Whatever the reason might be, stick until the end and I'll tell you that there are solutions out there. There are another lenders who are willing to take on the files that traditional lenders will not. Now here's what usually happens. You walk into a big bank, you're excited, of course you are, because you're planning to buy that house that you dream. Now when you walk into bank, you got enough income, you can easily afford the payments, but then bank looks at your file, you do not fit into that neat little box of theirs, they say no. But why is that? Let's understand that. Well, the traditional banks actually have very strict rules. If you're self-employed, they want to see 2 years of tax returns. And as a business owner, we all agree that you're writing down expenses to lower your taxes, right? So on paper, your income actually looks less than what you actually bring home. Or maybe you had some credit issues in the past. Life happens. Maybe you missed a couple of payments. Maybe you lost your job. Maybe your income reduced. Maybe you had a bankruptcy. But now you are right back on your feet. You got stable income. You can pay your mortgage. You're making payments on time. So you're ready to get that house. But banks, they see that number on your report. Here's what most people don't know, that traditional lenders aren't your only options. There are another type of lenders that look at your file differently than a traditional lender might. We call them alternative lenders or B lenders. Now don't let the name scare you, because these are completely legitimate and regulated lenders. They are just more flexible. If you're self-employed, the alternative lenders can look at your bank statements to get a real picture. Now, this is called a stated income mortgage. Here, the lender will look at your bank statement to get a view of your finances, to see how much money is coming out, how much money is going out. Now, you're not hiding anything, you're just showing real picture. If your credit score has taken a hit in the past, these lenders will look beyond just the numbers. They want to know your story. Have you been making regular payments in the last year? Did you go through a medical issue? These lenders look at context, not just the numbers. Now, I'm going to be straight with you. These mortgages will come with higher interest rates as compared to what the big bank might offer you. And I am talking 1 to 3% higher. That's because these lenders are willing to take on more risk. But here's the thing, this doesn't have to be forever. Think of it as a stepping stone. You get into the home, you build up equity, you make regular payments, you build your credit, you stabilize your income, and then in a year or two, you can refinance the same mortgage to a traditional bank with a lower interest rate. Now, let me give you a real life example. No names, of course. 2 years ago, I worked with a contractor, a very nice guy. His income was 100K a year. But due to business write-offs, his income was cut down to 45K a year. Now, all the banks said no to him. But we got him approved through an alternative lender. Of course, his interest rate was higher, like 2% higher than what the traditional bank was offering him. But he was able to buy his home, build equity, make payments on time, and within 2 years, we were able to transition him from an alternative lender to a traditional lender with lower rate. Now today, he's building equity instead of paying rent. Now that higher interest rate for shorter term, I think totally worth it. So if you have been told no by the bank, don't give up, because there are solutions out there. So here's what you should do in 3 easy steps. Firstly, don't go on and apply applications by yourself to every different bank. Why? Because every application you submit is going to be a small hit on your credit. Instead, talk to a mortgage agent like myself, because we know just by looking at your file that which lender will be best according to your specific situation. Secondly, be honest about your situation. The more I know, the better solution I will be able to find for you. And thirdly, have realistic expectations. If an alternative lender is the only option for you right now, understand that it's a strategy and not a dead end, because we're going to put you into that home. You're going to become a homeowner. You're going to build equity. You're going to start making payments. You're going to improve credit, and possibly down the road will get you a better interest rate. If you found this video helpful, give this video a thumbs up and subscribe to the channel. I post videos regularly about mortgages in Ontario, and especially about people who do not fit into traditional mold. If you have any questions, drop them down in the comments. I'll be happy to answer them. Or if you want to reach out to me directly, you can find my contact information down in the description. I will be happy to help you. Thank you. Take care and see you in next video.